You think you know how much you pay in taxes. You look at your pay stub, you see a number, and you think that's it. But what if I told you that number is a lie? Not a lie your employer tells you, a lie the system is designed to make you believe. The average American doesn't pay 20% in taxes. They don't even pay 30%. When you add up every single dollar that leaves your pocket and goes to the government, federal, state, local, and the ones you don't even think about, the real number is closer to 35 to 45%. That means for every $3 you earn, at least one goes to some form of tax. And most people have no idea. Today, we're going to break down exactly where your money goes, the taxes you see, the taxes you don't, and the one that's quietly getting worse every year. Let's meet Sarah. She's 34, works as a marketing manager in Ohio, and earns $75,000 a year. She's not rich. She's not poor. She's exactly average, which makes her the perfect case study. When Sarah looks at her pay stub, she sees about 15% withheld for federal income tax. She thinks her total tax burden is around 22%. She's wrong. By the end of this video, you'll know exactly how wrong, and it's going to change how you think about every dollar you earn. Let's start with the tax everyone knows about, federal income tax. This is the one on your W-2, the one you file every April, the one that gets all the attention. For Sarah earning $75,000, her marginal tax rate, the rate on her last dollar earned, is 22%. But that's not what she actually pays. That's the marginal rate. Her effective rate, the actual percentage of her income that goes to federal income tax, is closer to 12%. That's about $9,000 a year. Sounds reasonable, right? But here's the thing, that's just the beginning. Federal income tax is only one piece of the puzzle. And for most Americans, it's not even the biggest piece. Now let's talk about the tax that most people forget about, or worse, don't even realize is a tax. FICA. That's the Federal Insurance Contributions Act. You see it on your pay stub as two line items, Social Security and Medicare. Together, they take 7.65% of your gross income. Every single dollar you earn, up to $160,020 in 2025, gets hit with this tax. For Sarah, that's $5,737 a year. And here's what makes FICA insidious, it's regressive. It takes the same percentage from everyone, whether you earn $50,000 or $500,000. The bottom 50% of earners pay the same FICA rate as the top 1%. And most people don't even think of it as a tax. They think of it as saving for retirement. But it's a tax. And it's a big one. Next up, state and local taxes. This is where things get complicated and where the invisible tax really starts to hide. Ohio, where Sarah lives, has a state income tax that ranges from 0 to 4.797%. For Sarah, her effective state income rate is about 3.5%. That's $2,625 a year. But state income tax is just the start. Ohio also has local income taxes in many cities. Sarah's city adds another 2%. That's another $1,500. So now we're at about 4.8% for state and local income taxes combined. $3,600. And we're still not done. Now here's where it gets really interesting. Every time Sarah buys something, groceries, clothes, a coffee, she pays sales tax. Ohio state sales tax is 5.75%. But local jurisdictions add their own on top. In Sarah's county, the total is 7%. On the $30,000 Sarah spends on taxable goods each year, that's $2,100 in sales tax. But here's the kicker, she's paying this tax with money that's already been taxed. She earns $75,000. She paid federal, FICA, state, and local income taxes on that money. Then she spent what was left, and got taxed again. This is double taxation. And it's completely invisible. Sarah owns a condo. It's modest, 2 bedrooms, 1 bathroom, in a decent neighborhood. Her property tax bill is $2,100 a year. That's 2.8% of her gross income. Now, property tax varies wildly across the country. In Hawaii, the average property tax rate is just 0.26%. In New Jersey, it's 2.23%. Same government service, wildly different cost. And here's what makes property tax truly invisible: most people don't write a check for it. It's bundled into their mortgage payment. They never see the number. They never feel it. But it's there, every single month, taking a slice of their income. Sarah drives to work every day. 12,000 miles a year in a car that gets 30 miles per gallon. That's 400 gallons of gasoline. The federal gas tax is 18.4 cents per gallon. Ohio adds another 31.5 cents. Together, that's 50 cents per gallon in tax alone. Over a year, Sarah pays about $200 in gas taxes. Add in excise taxes on alcohol, tobacco, airline tickets, cell phone bills, and various fees, and it's another $150. $350 a year in taxes most people never think about. So let's add it all up. Federal income tax, $9,000. FICA, $5,737. State and local income tax, $3,600. Sales tax, $2,100. Property tax, $2,100. Gas and excise taxes, $350. Total, $22,887. Out of $75,000 in gross income. That's 30.5%. Sarah doesn't pay 22% in taxes. She pays 30.5%. And Sarah is middle income. For lower income households, the percentage can be even higher because sales tax and FICA take a bigger bite. For higher income households, federal rates go up but some regressive taxes become a smaller percentage. The point is, nobody pays what they think they pay. The real number is always higher. But there's one more tax. And it's the most invisible one of all. It's called bracket creep. Here's how it works. Every year, the IRS adjusts tax brackets for inflation. But here's the problem: those adjustments don't always keep up with actual inflation. In 2023, inflation was 7.1%. In 2024, it was 5.4%. But tax brackets only adjusted by about 2%. What does this mean for Sarah? It means that even if her salary keeps pace with inflation, she's not getting richer, just keeping up. She's being pushed into higher tax brackets. She's paying more in taxes not because she's earning more in real terms, but because the system hasn't kept up with inflation. This is a hidden tax increase that nobody votes on. Nobody debates it. It just happens. And it costs the average American hundreds of dollars every year. Sarah's story isn't unique. It's the American story. According to the Tax Foundation, the average American's